Today I'm going to discuss how much does PMI cost. Stay tuned because at the end of this video, I'll share a list of tips and tricks, so don't miss it. I'm Kristin Stampini and welcome to StampTV. So let's get started. If you put down less than 20% in cash on your conventional mortgage loan, chances are that you should plan to pay private mortgage insurance, otherwise known as PMI. Private mortgage insurance, or PMI, sounds like it might be helpful protection against something happening to your mortgage. And it is, but for the lenders, not for you. The policy protects the lender just in case you stop making the payments on your mortgage or the end of the loan and it goes into foreclosure. Even though the lender is the beneficiary of the policy, you as the homeowner must pay the monthly premiums for PMI. Here's what you need to know about how it works and how much it costs to pay PMI. Where do you pay PMI and how much does it cost? That's the question, right? The PMI cost is usually rolled into your monthly mortgage payment along with principal and interest, property taxes, and your homeowner's insurance premium. The cost depends on a few different factors, but you can generally expect a monthly premium of $30 to $70 for every $100,000 that you borrowed. So according to Zillow, basically, many lenders require a down payment of 20% in order to avoid the PMI. So some homeowners determine to avoid PMI wait to save more money, but then you're paying off somebody else's mortgage before buying, while others explore options like homeownership, investment programs, and other things. But depending on your financial situation, saving more money could mean years and years, okay? And years that you're paying somebody else's mortgage off. So something like this is an option for you. So you just have to figure out what your options are and that you may have to face PMI as an added expense on your mortgage. Is PMI forever and is it easy to remove? You know why paying PMI isn't ideal. You won't be on the hook forever. So you can request the lender to remove PMI from your loan once you reach a loan to value ratio of 80%. That includes paying for an appraisal to prove your loan is indeed 80% of the home's value. So if you wait though, the lender is required to remove the PMI automatically once the loan balance is at 78% of the original home value. Okay, so still, some lenders don't remove this right on schedule. It's important to know when PMI costs should drop according to your amortization schedule and call the lender to confirm PMI will come off monthly payment when it's time. So should you wait and save 20% for a down payment? Will that take you years and years and years of you paying off somebody else's mortgage? While there are ways to put 10% down with no PMI, you can be sure to avoid PMI altogether if you simply save 20% or more for a down payment. That might not be so simple to many of us. So that's not always easy, of course, and it could take you far longer to save that amount of money than it's really worth it. So you have so many different options. You know, there are risks to going this slower route too. Imagine that it takes you 5 years to save the full down payment and you can then get a 30-year loan for $235,000 instead of $250,000. But if the interest rates rise, you're taking that risk. Okay, also, your home has gone up in value, so it probably isn't worth it. So moving from a 4% interest rate to a 5% interest rate increase, your monthly payment and principal and interest, you'll also pay another extra $180 for property taxes and homeowner's insurance and so on, bringing your total to $1,522. So of course, there's no guarantee that this is how things will play out. It's impossible to predict interest rates will change, even in the short term. So we never know what's happening in the market till it actually starts to change, but we can predict it somewhat. So the point is that any strategy you use for buying a house comes with risk. And some homeowners prefer to act sooner rather than later and leave the home buying plans up to chance. So if you really don't want to pay PMI, you can research options for no PMI mortgage insurance. You can also consider working with us. We can point you in the right way of what to do and who to talk to. So that's it about PMI, and hopefully you learned something today. We can help you out. Just give us a call. If you liked it, please click on the like. Also subscribe to my channel, StampTV. I put out tips every single Tuesday for your move-up seller. Thanks for joining me today. I'm Kristin Stampini, and have a wonderful week. Thank you.